Happy Sunday, everyone. Tom Grisafi, Agbo Media, Agbo Trading, coming to you from the Nesvik studios here, Nesvik Trading Floor here in Nashville. Myself and a couple associates will be at CattleCon in Nashville. I hope to meet a couple of you. Come up to our booth, CattleCon 2026, Nashville, Tennessee, February 3rd through 5th. I could be the luckiest guy in the world. I only have to walk 2 blocks from my office to get there, and then I only have to walk 2 blocks from my office to get home. But you're not here to hear about CattleCon or where I live. You're here to see Mr. Wiesemeyer, the one and only. I can tell he's in the back. He's in Orlando. He rushed up to his hotel room. He's getting a drink. He's doing his hair. And with that, let's give him a proper introduction. Mr. Jim Wiesemeyer.
Hello. I'm in chilly Orlando, where it's 34 degrees, and it's going to get down much cooler. I think it's the lowest temperatures in 90 years here. Of course, they knew right? I was coming.
Looks like they put you up in the Rain Man suite. Remember the Rain Man suite from the movie? You son of a gun.
And then I had just had a dinner that concluded as an excellent seafood and steak restaurant with Mike Seifert. He's the CEO of National Grain and Feed, but I'm here to speak tomorrow morning to the Farm Credit Council. My good friend Christy Seifert is the CEO of that excellent group. And coming up to the hotel room, Tommy, I met somebody from Compeer who is a listener of the podcast. And I told him, I said, I'm just going up to do the podcast. He goes, oh, that's a little later than normal. I said, you do what you got to do.
Let's get into it. Okay. We're going to be a little light on graphics because, but that's okay. We have plenty loaded up. Let's get into the show. The markets are open. They're moving. There's a lot going on. And as you give Wiesemeyer's perspectives, it'll make sense why the markets are moving. We'll start with the lightweights, and then we'll get up to the heavyweights. Let's go. Trump in Iowa, year-round E15, and now it's up to Congress.
Yes, he was in Clive, Iowa this past week. That's a suburb of Des Moines. And while it looked initially like he wasn't going to bow wow on year-round E15, he came out and full-fledged supported it and said, get a bill on my desk. So now the onus is on Congress. You'll recall, Tommy, that in the spending bill, they defeated an amendment for year-round E15, but I was not surprised about that because it was too sensitive of an amendment. Plus, you had the Speaker of the House and the majority leader in the House, both Republicans, Mike Johnson and Scalise, are from Louisiana. They're a top oil producer. So now the onus is to get a separate, maybe not a separate bill, but a bill that they can attach to another must-pass bill. And I think that's what will happen. It'll be a supplemental spending bill that will include a number of things, including, it looks like, if they can get total bipartisan approval, on at least $15 billion additional farmer relief package. Now, a lot of listeners have already emailed me, when's the timeline for that? What are the odds for that? I can't guarantee you anything in Washington, but I'm fairly confident that they will approve an additional farmer aid package. And it will be probably $15 to $16 billion. Timeline? February, March, or April. Well, it depends on when they bring up that supplemental spending bill. And the reason it didn't pass the last time was because I think the biofuel and the corn industry lobbyists probably relied too much on the support of American Petroleum Institute. Their president, a friend of mine from his ag days at the White House, by the way, Mike Summers, used to be in the John Boehner's office from Ohio, and he used to be Speaker of the House, John Boehner. But I think just a couple of refiners balked at that, so it just took a little more time to ink a new proposal, and that's what this E15 Council, if you will. By February the 15th, they're supposed to have legislative language ready, and February 25th this year, they're supposed to introduce it. So we're going to see a lot more, but I think a meeting of the minds is there. The corn and biofuel industry has to give a little for the small refiners, and I think that they will. So I'm in the more optimistic camp that we'll finally see year-round E15. And what's the significance of that? That's part of the what's needed in agriculture right now to increase domestic demand for U.S. farm products. In this case, corn. But in other cases, with the Renewable Fuel Standard program that will be coming out within the next few months for 26 and 27, what are the mandated levels? What are the reallocations? And when we ever get, and we'll talk about this later, the details of the 45Z program, sustainable aviation fuels. That's what's going to kick in higher prices for grains, because while we have record corn exports, we have relatively tepid demand for soybeans in the export market, and wheat is a fierce competitor around the world. There's a lot of wheat around the world, so look for domestic utilization to be the focus point all year. We're going to be talking about this all year.
That was a mouthful.
Yeah.
Next one, government funding. What happened next? And it's good, Jim. The timing of you and I, not because my travels, your travels, I wasn't able to do this Friday, Saturday. We got it done Sunday. I'm telling you, God want us to do this Sunday because there is a lot going on right now.
Yeah. We have a limited partial government shutdown. The reason is because the Senate acted too late last week, and the House has to approve the changes that the Senate made. Not to get too wonky on you, what the Senate did is they broke it up into two different sections. The bills that have wide bipartisan support, and the other one from Homeland Security or the border issues, the ICE funding. So that's going to be held on a separate track. Well, the House has to approve that. Now, today, House Speaker Mike Johnson, he's from Louisiana, said that he supports some of the federal immigration enforcement reforms backed by the Democrats. And that's why the Democrats held this up. They go, before we pass anything on Homeland Security, we've got to have some reforms of the immigration enforcement reforms, the deportations, etc. And there's growing support for that. However, he said on NBC's Meet the Press program today, Sunday, some of these conditions and requests that they've made, meaning Democrats, are obviously reasonable and should happen, but others are going to require a lot more negotiation. So what's that mean? They maybe could get a bill done tomorrow, Monday, but it could flow into Tuesday. But bottom line, I think the votes will eventually be there to pass a 2-week extension to Homeland Security until they work out something on some of these issues that I talked about previously. But the others, the vast majority of government spending will be approved, and that'll last through the end of September. So we're almost out of the woods when it comes to spending measures for fiscal year 2026 that started October 1.
Okay. That's interesting. We didn't have it as a headline, but didn't the Supreme Court make an announcement this weekend based in Minneapolis 5-4? Did you see that with the to Trump's favor that he is allowed to stay up there with ICE? And
yes, they did.
5-4.
They did.
And yeah, of course, the press isn't going to cover it because it wasn't to their advantage.
No, right? but they've got the word, and you had the Wall Street Journal has an editorial in, I guess, tomorrow's paper. They put it online first. There's a state Texas election that was a shocker. that the
What happened?
Democrat won in a district that Trump won by at least 16 points. And increasingly, it looks like deportation issues have picked up steam in these election races. Now, that's just a state election, so it's hard to equate that to these coming November elections with all of the House seats up for re-election. But the trend is there, Tommy. The American public is basically saying to the Trump administration, we want a secure border. We like what you did about protecting our border, but you may be going a little bit too aggressive on the deportation. So, and I think Trump's got that message, because you can see how he brought in Tom Homan into Minnesota, trying to decrease the pressure in the state of Minnesota. So I think I would imagine the internal political election polls that's coming into the White House are not good news for the Republicans.
Speaking of good news for financial markets, at least we have some certainty. Trump to announce Fed head nominee.
We finally got it. It was a Kevin, but in this case, it was Kevin Warsh. Now, the markets traded off. Remember, on Friday?
Did they ever last Friday?
That was the signal that the metal saying, ooh, he's a hawk. And he could really deal with inflation in the months ahead. And the dollar went up. We had a pretty good rally in the dollar. And of course, the grains, as you said before, have been working on, they've been focusing on the metals and the dollar. And that's why they're taking a hit again overnight, as you said. And I think that'll build, by the way, throughout Monday, unless we had some positive news. But let's go back to Kevin Warsh. Who is he? He's the nominee to succeed Jerome Powell. Now, Jerome Powell will be the Fed until May the 15th this year, and he can stay as a Federal Reserve governor until the end of January 2028 if he so chooses. As far as Warsh, who is this guy? He's a former Fed governor from 26
handsome
to
young guy. Looks like he could be a politician.
That's why I think Trump likes him. He's going to be good on camera. He's pretty good articulate. He served on the Fed's board of governors, was one of its youngest members when appointed. His college background, BA from Stanford University, law degree from Harvard Law School. That's all we need is another lawyer. He worked as an investment banker at Morgan Stanley, and that's what
he worked under Stanley Druckenmiller.
I'm sorry?
He worked under legendary trader Stanley Druckenmiller.
Wow. Well, whenever you work in the private sector and come in to work in a government type job, that's always good to me, because they know risk. They know in any policy decisions, there's winners and losers. And I like when industry people come in to work for the government. He also served in the George W. Bush White House. He was an economic policy aide. He had roles in academia, Stanford Hoover Institution, and the private sector. So, and he's been on various corporate boards and senior roles in finance since leaving the Fed. And again, that gives you a good background, because he knows the Fed decisions affect corporate decisions on hiring, coming out with new products, etc. Now, Trump has publicly praised his qualifications. He was, by the way, the favorite of Treasury Secretary Scott Bessent. So I think that went a long way with Trump. Now, he comes amid Trump's broader pressure campaign on the Fed that has been unrelenting to adopt lower interest rates. Now, when you look at Warsh's history, he's kind of reinventing himself the past year or so, because he was definitely a hawk. In other words, was aggressive on inflation. You had to prove it to lower interest rates, but he's kind of mellowed the last year. I don't know whether it was to get the job or not.
Now that you said the word hawk, I've been waiting here patiently. I went on my phone on X and asked Grok, what is a hawk? Because we're saying hawk, and I think we know what we're talking about, but I bet you our viewers and listeners don't.
Yes, a hawk is when you hold interest rates higher than some people want, because you have to see the proof that inflation has been curtailed, corralled, if you will, and also the spreadsheet, their balance sheet, and he hasn't changed there. He's criticized the expanded credit balance sheet, and he advocated reducing it. That's a hawk. To take a more aggressive stance in monetary policy. And that's a stance that could raise long-term rates. I'm not saying they're going to go up, but he brings another element to this debate. And some backers, including Stanley Druckenmaker, Druckenmiller, that you mentioned, argue now that he isn't a permanent hawk, and he's shown flexibility, aligning more recently with calls for rate cuts. So that comes from his guru. So now there's one fly in the ointment here, Senate opposition, although I think he could
that guy Tillis from said, hell with that, I ain't voting for him till we get Jim, I've been listening, I've been watching.
Yes, he's not going to vote until the Justice Department's investigation into Powell concludes. Now you'll remember that this goes affecting the dramatic reconstruction of the Fed, that the cost went well over the
shocker that the government built something and spent too much. I know you're going to be
yes. So bottom line, his initial confirmed nomination rattled some markets because the uncertainty of how his views on rates and the Fed's balance sheet might influence future policy. His relationship, Trump's relationship with Powell, and broader Fed independence is debated in the marketplace right now. But he is, like I said, he's has the charismatic look. He's a good speaker. He knows what he's talking about, and he'll be nimble in some of his comments. And eventually they'll conclude that investigation. And I would say the odds favor that he will eventually be confirmed.
Well, let's stick with the FOMC theme here, because we had some more news this week. We did have a meeting, but we did not lower rates. And rates are all over the place due to the dollar and everything else. But the big dog still in charge is Jay Powell. He is what you casually mentioned, under investigation for spending too much. I like Jay Powell. I think he's great at his job. No, I think he let inflation get too high for too long. He used that damn word transitory too many times. He kind of looks like a jackass. I mean, you can't say the word transitory 100 times and let inflation go to 9%.
Yeah, it's like my doctor tells me my weight gain was not transitory. He wants it to be transitory. He wants it to go down. That's when I'm going to take action. Maybe the Fed chairman will be. However, most people don't think Powell, remember he's Fed chair until May the 15th. So that the March meeting coming up, I would think that the marketplace would think that they'll still hold, pending what we see in some of these data-driven Fed markets. The jobs report's coming out this Friday. That'll be a key report. And of course, inflation reports between now and their March meeting. But that doesn't mean we're not going to have any cuts this calendar year, because I think you'll get probably at least one, if not two, interest rate cuts by the end of this calendar year. That's the bottom line. on the FOMC meeting, that didn't surprise anybody, and he held steadfast with his data-driven that they need data in order to make the next move. But I don't buy any of the minority conjecture that we could actually see an interest rate increase. I just don't buy that.
And the bond markets are not reflecting this.
They're not reflecting it at all. Huge percentages. Right.
Let's go U.S. ag trade deficit update.
We had that out. Well, USDA is going to officially release it, I think, Tuesday this week. But if you look at the U.S. trade deficit overall, if you did homework, a lot of people don't anymore, you can figure this out. And this is what it showed. The U.S. agricultural trade deficit widened in November despite lower exports and imports. Ag exports totaled a little over $15 billion in November, and that was down from $15.62 billion in October. Imports slipped to $15.59 billion from $16.04 billion the prior month. What's that mean? It produced a monthly agricultural trade deficit of $553 million. Now, that was wider than October's $424 million shortfall. So U.S. ag exports so far in fiscal year 2026, remember that started October 1, stand at $30.66 billion exports, while imports total $31.64 billion. You don't want it higher, but it is. So that means a $980 million deficit for the first 2 months of the fiscal year. By comparison, the first 2 months of fiscal year 2025 saw a larger $2.86 billion deficit. So are we making progress? Yes, that we're narrowing the gap here, Tommy, on the deficit. But despite that improvement, USDA's full year outlook still points to red ink. They're forecasting 26 ag exports at 173 billion and imports at 210 billion. That implies a $37 billion deficit. Now, that'll be smaller than fiscal year 2025's record, 43.7. So 37 estimate now. We had a record $43.7 billion deficit. So progress, we're whittling it down, but we have room to go.
Very good. Let's talk about 45Z, the never-ending.
This is another component of wherever I go in speeches, and analysts and farmers now know that we have to get domestic demand to kick in. Yes, we have record corn exports. So far, so good on corn. Soybeans, we need to expand the universe of our exports. Wheat we have a lot of competition in the wheat export arena. So that means domestic utilization to whittle down some of these, the carryover stocks, especially for corn and soybeans. And that's why we need that year-round E15. That'll increase demand for every percentage point up in that use of the ethanol blend. It's a significant increase in demand, even though you have limited number of gasoline stations, by the way, that offer E15. I know in my area I can't get E15. However,
Really?
that's just one component. But the other side is what we call the 45Z program and the sustainable aviation fuel. We have been waiting for well over a year, probably 2 years, for the details of this. Now, that has to come from the Treasury Department because it's a tax incentive. Let's hope whenever they announce it in the next few months that we'll get a very positive rules and regulations relative to the consumption, in this case, soybeans, but primarily soybean oil. If it goes very positive for the ag sector, it'll be what that will crush for oil. That would be a fundamental change because we usually crush for meal. We have to look how they treat other countries other than Canada and Mexico relative to who qualifies and things like that. But I just want to go bottom line. This is an important program that we really can't analyze it until we know the facts and figures of the rules and regulations. And we're waiting for the Treasury Department and the Internal Revenue Service to come out with them because it's a tax incentive program. But I think it's a good move by us going that way, Tommy, because we're going up the value chain. We're not just emphasizing the flat corn or soybeans, raw soybeans, like Brazil does. They ship a lot of soybeans to China and they process it. China learned a few years ago that it's a jobs program to process those soybeans. Well, let's do the same thing here, but use it domestically. And that'll bring in more jobs and it'll boost processing capacity. So these programs make a lot of sense when you factor in, this is not just a farmer program. This is an agribusiness program. This is a jobs program, and it stays in the rural sector where more income comes in and you turn over those funds that help schools, etc. So I cannot emphasize the importance of these programs. The RFS, the Renewable Fuel Standard Program, mandate how they treat the reallocations, the RINs, how they handle RINs, the value, and then also for the 45Z program. We will hit on this all year because it's that important.
Speaking of important, our neighbors to the north, our neighbors to the south, we a lot of verbiage this week with Trump and Carney, and then we got a USMC. What the hell's going on here?
Well, the U.S. Trade Representative Jamison Greer met with Mexico, his counterpart. So they're starting the process of renegotiating the USMCA. Formal talks will begin July. There's Jamison Greer. Yeah. He's kind of the nerd of the cabinet, but boy, does he know his stuff. So you got to listen when he talks. Now, in the case of Mexico, he said he had a good meeting. They'll continue to have meetings. In the case of China, it's like 180 degrees difference. The administration doesn't like what their prime minister, Mark Carney, has done relative to China, relative to speaking negative, implied speaking negative about the U.S., in particular Trump, when it comes to trade and other policies. Yeah. And even some Canadians are saying that he's taking a risk. And if they ever do a formal Canadian China agreement, you'll see Trump come out and more than threaten, he'll implement. Right now, he's just threatening that probably won't occur. But I want to get still a positive twist on this. Okay. Eventually, I hope we come back to the positives in the USMCA because we have a North American market. All countries need this. We have economies of scale with all the people in all the three countries, the advantages, the logistics, working with Mexico and Canada. But the U.S. is going to use the leverage because that's Trump 101. He will use anything for leverage. And he's the one who came up with initially USMCA because he didn't like the North America Free Trade Agreement, NAFTA. So I don't think he wants to kill the agreement that he began, but he'll use all the leverage that he can to get some of the changes that he wants. And it's primarily having to deal with China's end around of sending automobiles, electric vehicles through Mexico, and now in this case, maybe through Canada, with Canada's separate agreement for, I think, 49,000 Chinese EVs with their recent agreement that China agreed to lower the tariffs on Canadian canola and some other products. So all that's wrapped in. But again, what listeners need to know is we've got time on this issue. They're going to cuss and discuss this going into July. They're not going to end it. If they do, it still sticks around for 10 years. We would have a new administration come in and they'd probably resurrect it anyway. USMCA is here to stay. We've got to go through ups and downs, and that's typical in a Trump administration. Just keep your eye on the end conclusion, and that will be they'll reform some of the principles in the USMCA, but overall, I think we're going to continue in a North American market.
All right, you take a minute, clear your voice. I'm going to mute your microphone, and I'm going to talk a little bit about the markets. All right, everyone. On Friday, we had just the craziest day ever, and it all started from the night before when Trump announced that he was going to get a Fed chair. Now, I'm going to do a special this week and talk about it, but long story short is silver had an incredible move. And the week before, Jim and I were doing the show, and we were excited. Silver went through 100. Last week, silver went to 122. It went all the way down to the lower 70s. The thing was, on Thursday night, silver traded 118. On Friday afternoon, silver was trading in the 70s. It had a 7, 8, 9 sigma move. If you don't know what a sigma move is, Google it, grok it, go learn a little something about a standard deviation or a sigma move. With that, gold moved $500. Fortunes were made and lost. I was on both sides of those for a few minutes of the day. It was extremely scary. Now, as the dollar rallied and gold and silver broke to have its worst day ever, even worse than the Hunt brothers, it affected other markets. It affected the metals. It affected energies. Coming into tonight, crude oil's down 250. Grains are down. Stock market's down. Bitcoin, I don't know why, but Bitcoin's been getting killed whether you like it or don't like it. Bitcoin's down 7,000 tonight. It's trading about 75,000. So a lot of asset classes that were going straight up are going down now. It's really affecting the markets. If you'd like to learn more about markets, of course, we'd like you to have you on the premium side. $25 a month, $250 annually. We can get you over there. Let's get back to Mr. Wiesemeyer. I bet you he has his throat clear. He's drinking a little bit of fluids. And with that, don't forget, we're going to be at CattleCon this week. So excited recording this here in Nashville, and we're going to be in CattleCon. Love to see you on the premium side. Let's get back to show. Mr. Jim Wiesemeyer, turn his mic back on. He's probably had a coughing fit over there.
And you saw where before the market was giving signals, Tommy, that especially in the silver. You remember when the exchanges a couple of times raised the margin requirements?
Can we talk about that a little bit?
Yeah.
Okay. You don't have to be a math genius to understand this. The exchanges have been raising margins, which makes sense. If a big silver contract is 5,000 ounces and it's worth $50 an ounce, you have a $250,000 contract. When silver goes to 100, you have a $500,000 contract. When silver goes to 120, so you need to leave more money in your account to trade that. Otherwise, it's not fair. So here's the problem. The exchange is raising the margin. You need 8% of the notional value of the contract. You need 11, you need 12. When a contract moves 33 at one point, 38% lower on the day, and you only need 12% of the money in, you could have bought a silver that day, walked away, went to the bathroom, forgot you had a silver on, and thought, well, I have enough money to have one on, even if it goes down a bunch, and lost all your money and a bunch more. And I'm sure that happens. What the exchange did, and this is wild, Jim, this has people pissed off. Silver lost 33, 34, 35% of its value Friday. You know what the exchange did? They raised margins by 35%. So now when margins were going up, the pressure was on the short, right? Every day silver went up, you're short, you have to make the margin call on the short, and you have to keep more money in your account. So that leaves pressure on the short. Silver has its worst down day ever. And now you have that massive loss or loss of profit or loss of the trade, and you have to send in more money. So just tonight, silver's been down as much as $2 and up as much as $9. And that's in the first hour and a half of trade. I mean, this is unbelievable. When I was a little kid, silver is only worth $9 an ounce. It's moved more than that tonight. A little long-winded, but very important. You're watching
Absolutely.
history.
And the grains, like I said, we're focusing on the outside markets more recently, and that's why they're feeling the pain. They're going to have to look for another fundamental reason to either go up or down. And
that brings us to our next subject that you'll tie in real well with this. I'll let you
the declining US dollar. We had been down around 10% or so until recently. I learned a long time ago at hearings on Capitol Hill, congressional hearings, where I sat for long hours in the 70s and 80s and got to understand the economics of agriculture. And the dollar really, to make a considerable impact on a declining dollar, it has to move down and stay down for 4 to 6 months. Usually it takes a number of months to have an impact. Now,
it's not just a one-day event.
Yes, but that doesn't stop traders and commodity analysts deciding it as a market factor. That's just the way it is. And they'll say, oh, the dollar went down today, giving a bullish tone to corn and soybean markets, et cetera. You'll see that a lot of times. And that's why when it goes up a lot, and it went up a lot, that will be cited tomorrow as a factor in any decline in the grain markets. But currencies are very hard to track on a impact basis. But again, the best I can say is that you've got to have a trend. If you trend lower between, like say, between now and the end of the year, if we're down 10% on the dollar, that is constructive for farm exports because the vast majority of farm products are based in dollars. And so if you lower the value of the dollar, that means they can buy more of the products in that case. So if you have a higher dollar, it makes U.S. farm products less competitive because it means using more dollars to buy similar amount of commodities. So that's really why we still cover the dollar every day. Any market analyst should.
Mhm.
They should cover the dollar, the gold and silver, and
Mhm.
the interest rate, the bond markets, because these are all tied together.
Yeah, and let me add a little trader talk because I'm sitting on the NESVIC trading floor.
Yeah.
Those are called pairs. So we as Americans think everything's based off the dollar, but that's not true. You could trade the Canadian against the yen. You could trade the Canadian against the euro. You could trade all these currency pairs. And if you've ever looked at a Bloomberg terminal, they have all the countries lined up on one side and all the countries lined up on the other side, and you can watch all those currency pairs trade. And what tends to happen, I think it's happening tonight, is when you see that dollar yen start to move, it starts to show that there may be stress in the economy. Or the dollar, the euro, which is, you and I are old enough to remember, we used to have a D-mark, this one, the Italian
Yes.
lira and all that. Now all that shit went away and we have the euro, correct?
Yes. And you also saw in recent weeks the conjecture about intervening on the yen. And that really
Right.
affected trading in the currencies. And then when Scott Bessent came out and said the U.S. was not going to help in any intervention, that was a big market factor that particular day. So, yeah, just look at the broad brush when it comes to currencies if you're trading agricultural commodities.
Let's head up to Minnesota. I know you got a good feeling about this one, a good
Amy
vibe.
Klobuchar, yeah. At first I thought she would run, and then farmers said, oh my goodness, we hope she doesn't run because we
Why?
like her. Well, they liked her as the ranking member on the Senate Ag Committee. They thought that she would get bogged down in all the fraud that's going
What?
on
Whoa,
in
whoa, whoa, whoa. Fraud. Did you say the F word
alleged
here on this
fraud
show?
in Minnesota. Yeah,
Alleged.
you think?
Jim,
I'm almost
alleged.
positive there was fraud. But anyway, and
Alleged.
Minnesota is not the only state that we're going
No.
to see when
No,
we're all done.
Gavin Newsom's like, there's fraud everywhere. Like, boy, did he take the pressure off of Tim Walz. He's like, oh, well, every state has fraud.
Yes.
It's just part of doing business, right?
But Amy was a former prosecutor, and I think when she announced her intention to run for Minnesota governor, she'll get it. She'll get the nomination.
Oh, very good.
And she'll win because of her track record in getting votes in Minnesota. Now, if that's the case, yeah, she was a former prosecutor. She has more to gain for the years ahead because if she gets involved in clearing up this morass called Minnesota, really Minneapolis government, she's going to be a hero. And that could put her in good stead for the future under another White House run. So watch the long term on this one. Now, if she wins the race, which I think she will, who's going to be the top Democrat on the Senate Ag Committee? Ranking if they don't control the Senate, chairman if they do. That'll be Cory Booker, Democrat.
He don't know ag, does he?
Well, he's a vegan, so cattle people won't like it. Pork people won't like it.
Are you kidding me?
He's a vegan. Oh, yes, and proud of it, and he pushes it. So he's going to be big in the food and nutrition area. His plus side is he's a big supporter of conservation programs, hopefully working lands in conservation where you have to work the land in order to get a payment. But another one that I think the ag sector may not know as much is he wants to focus on checkoff programs. If you want to open up a can of worms in the ag sector, Tommy, mention checkoff programs because that garners a lot of money for certain commodity groups because, say, in soybeans, it's based on acres planted. And that's a chunk of money when you're talking the soybean acres. Now, I'm not saying he's going to get rid of it, but he being a ranking Democrat, he's going to bring that up to the fore. And all I know in my history, whenever I write about checkoff programs, I get lots of emails that people get upset. So if you want to get upset, write about checkoff programs.
Well, just while you were doing this, I just Googled. I don't think they could see me. They're just seeing you. So I'll just read this. I searched beef checkoff budget, and it said the Cattlemen's Beef Board, CBB, approved a 38.1 million budget for the 2026 fiscal year, focusing on promotion, research, education to boost beef demand. Key allocations include 9.3 million for research, yada yada yada. So this thing, and everyone's got them: corn, beans, this, that,
Yes.
lentils,
And some
edibles.
states have checkoff programs, et
Oh,
cetera.
is that
I've learned
right?
that
Yeah.
over the years. But I'll
Okay.
tell you, on my bias, and everybody has a bias on things.
Well, that's why you're
I
here.
think overall, now everything can be changed and reformed to make it more farmer friendly. If you have a farmer who doesn't want to pay it, they should have an opportunity not to get paid back if it's automatically taken out. I understand that, but the value of checkoff programs, I think, are worthwhile because it brings market research into what we've been talking about earlier. It's allowed market research to look at increasing not only domestic but international demand for various farm products. And overall, the groups have done a very good, not just a good job, a very good job in looking ahead, not just the next year, but overall in a period of 10 years. What's going to be the food diet, say in Japan in 2040 and things like that? Believe it or not, you can cite some trends that'll help you out in what type of product you grow for the years ahead, et cetera. So overall, I think checkoffs are very valuable, brings market research, needed market research to agriculture, but that it's a sensitive issue, absolutely, because not all farmers agree with what I just said.
Oh, very good. Let's take it home. EPA Lee Zeldin.
We're going to have, they're billing this as a big meeting Monday morning, tomorrow morning.
Tomorrow.
Yes, yeah, tomorrow morning. And Lee Zeldin's going to be there, EPA administrator. We have Secretary of Agriculture, Brooke Rollins. We have SBA, Small Business Administration, Leffler there. Now, EPA teased what they called a major announcement on farm equipment repair. Now, that's probably the right to repair. And, that's been a big farmer issue for years, that farmers' ability to repair their own equipment. That's been a long-run pain point in the U.S. ag sector. And so we're going to look for that. And recall that Trump has indicated we're going to make some farm equipment regulation moves. He said that a couple of weeks ago, and I think that this is part of it. Now, they didn't detail what other things could be announced, but there's a number of other things beside right to repair that could come up. Zeldin has hinted at easing emissions-based barriers that lock farmers out of diesel exhaust system fixes.
The DEF, yeah.
Yeah, that's DEF, the diesel exhaust fluid systems, and that's big time. You go in farm country, if you get to the nitty gritty, usually a farmer will bring this up, and it's a frequent source of shutdowns, Tommy, and dealer-only service requirements. So I think EPA will clarify some lawful DEF repairs, sensor replacements, post-cost repair resets, et cetera. So look for that. So we're going to get something big on farm equipment Monday morning from those triad of government officials.
Well, very good. Before you leave us with the good news, you've been traveling like a madman. Tell us a little bit about your past travels. I know the snowman got you. And then where you are today and where you're going this week.
Well, you and I did a recording of my speech for Joni Grimes out in Columbus, Ohio, and I think it really went well because we did a YouTube, right? That we gave her a link to a YouTube. It was very good graphics because you produced it, and she was able to send that link to all those farmers and her clientele that couldn't make it. And then I got on live at the end of the recorded presentation, and then answered their questions. We're going to do a couple other of those in the months ahead, and that's a little sell job. Is if any group is listening and it's a little bit less budget because you don't have to pay me to come out, we can do those, and just contact either Tommy or myself and we can work that out. Then I went this weekend to my original hometown, well, Illinois, but St. Louis, and we had my sister had her 80th birthday. We had a family reunion, and so that was all fun, and played cards. Of course, I lost again Friday night. And then now I'm here in Orlando. I'm going to speak to the Farm Credit Council. They have 800 people here, by the way.
Are you kidding me?
Yep, 800 people. Yes.
800 people trying to figure out how they're going to renew operating for farmers.
Yes, there's wide interest here. And then I'll leave here to go to Baton Rouge, Louisiana for the sugar cane growers. I love that meeting each year when I do it. And then, trust me, it's hard to get from Baton Rouge to Palm Springs, California. That's all this week, Tommy.
You just don't tell your pilot Palm Springs. I mean, you just don't get the
man, I'm going to go through Houston and then there. So it's my first two jaunt trip in a while. But my favorite place to speak is Palm Springs. So that makes the end of the week a long week. Good, because that comes at the CURB meeting, crop insurance, and Mike Torrey, longtime friend. He's an agricultural consultant, has a great group there. So that'll give me the tenor that you can see. I'm going to be talking to a lot of farm credit people. They have a light riding, by the way, on the Farm Bill 2.0 or skinny farm bill. There are farm credit provisions in there that they want done. So they're very interested in what's going to happen to Farm Bill 2.0. And of course, sugarcane is going to be wanting to know, hey, the downturn in prices. Sugar has been hit by a number of negative things. Look at the GLP-1. Drugs have hurt the demand. You've got the dietary guidelines, de-emphasize sugar. You have the RFK Jr. saying sugar is poison. I mean, where do you go from there? So they want some good news, and I'm going to tell them it looks like we're going to get another cash infusion out there from Congress. So hopefully we can turn this around for sugar as well, not just sugar cane, but sugar beets in the Red River Valley. And of course, the CURB meeting is crop insurance. I'll get another signal of the reinsurance people and things like that of where we are in the crop insurance sector. But I'll tell you, Tommy, everywhere I go on crop insurance from a farmer level, they should pencil out ECO and SCO, because Congress in the One Big Beautiful Bill really increased the taxpayer subsidies for those programs. So pencil them out. And that's going to be a good thing going into our last subject, positive developments.
Let's take it home, Brother Wiesemeyer. Reverend Wiesemeyer.
This is what I'm going to end with FCC meeting tomorrow, Farm Credit. Dietary guidelines is a boost for dairy and protein. The renewable fuel standard mandates, as we keep saying, 26 and 27, whenever we get them, maybe March, maybe late February, should be positive for corn and soybean demand. When we get the details, 45Z program, we've heard that. Sustainable aviation fuel, that'll be supportive, especially for soybean demand once we get the details. I keep mentioning Congress will provide at least 15 more additional money in farm aid to go with the $12 billion Farmer Bridge Assistance Program that will be out. It's interesting. At the Commodity Classic coming up here, Rollins will be speaking, and I bet she's going to announce the payments during her address at the Commodity Classic. So that's in San Antonio, I think. I'm not quite sure. And that'll help bridge the cash flow gap until those new Title I provisions kick in October 2026. The fifth one is farmers are getting special disaster relief program stage 1 payments. They're going to see a top-up payment sometime in early summer. And that, again, that's going to bring additional cash flow into farm countries. I've said that several times now. cash flow. That's very important right now in the ag sector. Where I can guarantee you a rally in early spring in corn and soybeans as those two key commodities vie for planted acres. Watch it. The seventh one is if China lives up to its purchase commitments. They did on the 12 million metric tons of soybeans. Will they do it on the next commitment? Because it's 25 million, Tommy. So if there's a lot of naysayers, of course, the ag sector analysts are always negative, or most of them are negative. They don't think that'll happen. But if it does, then you're going to get a rally in beans. The eighth one is pressure on Congress approving year-round E15. I think it's going to happen in the supplemental spending bill. The ninth is the U.S. economy. I think we're going to have more growth that'll boost overall demand for farm products because we'll have a better economy. People will have more money in their pocketbooks, not everybody, but enough, and that'll be good for the consumption side. And the last one, interest rates will eventually go lower, probably 2 more Fed cuts this calendar year, and more if needed. So that's your top 10 as far as positive developments if you get too down too long.
Mr. Jim Wiesemeyer coming to us live from Orlando on a Sunday night. It's cold down there. It's cold all over America. I'm in Nashville. Icy as heck here. Everyone stay safe. Jim, I can't wait to meet with you again. This is my favorite thing I do all week. And don't tell my wife that. See you, buddy.